Hello and welcome to another update video about ADA. We want to start on the daily chart, then quickly go to the 1 hour time frame to give you an idea of the latest microstructure. Overall, the levels haven't changed on this chart, so we are still dealing with a scenario that has a chance as long as it's holding the 29-cent level here, but very thin ice now, the white count. This is the bullish scenario where we have a 5-wave move up into the March highs, a pullback into the yellow support zone. 29 cents, as you know, is the key level where momentum flips from bullish to bearish, where this 1-2 setup will reduce in likelihood. So below the 29-cent level, it basically has a, let's say, 95% chance to be invalidated, which is why I've always highlighted that level as critical risk level. We've already broken it, but not sustained it. So technically the bulls have a chance, but we need to take a look at the microstructure on the 1 hour chart to get an understanding of, okay, when do we get an indication that a low has formed? So far, ADA has failed to give us clear confirmations of lows, okay, local lows, so the trend is still down. The latest 1-2 setup here internally was also invalidated. Mentioned to you though that this was questionable because of the problematic 4-5 pattern there at the end. So there was a bit of a warning there, enough reason to be on the side of caution. Now we're still holding that yellow support region, but I don't see any sign of a low in place. So that means below 29 cents, the invalidation point will become important, which is at 21.5 cents. Below that level, it is clear that the white count is invalidated. We have to take it off the chart. I won't take it off the chart before, but if we get below 29 cents, the purple count or the yellow count become more likely. These are not new, we talked about them. In the purple count, we are dealing with just one more low in wave 5. So 1, 2, 3, 4, 5, and could then get a larger rally. Or in the yellow count, we have an A, B, and the C could even be a little bit longer. But in all of these scenarios, at least a relief bounce seems likely, and these relief rallies could be used to exit, for example, positions, instead of stopping out at the low. But that's an individual decision, that's a personal decision. I can only highlight to you the levels. How you manage your trades, that's of course up to you. I think it's generally reasonable to stop out below the 78.6 retracement. Some people wait for a relief rally. That might never come, so it's an individual decision based on individual risk profile, the individual risk profile and risk management strategies and the trading plan, of course. Now, there are two key levels that I've always highlighted, the 29 cents and then the 21.5 cent level is the formal invalidation point. I think it's just worth to be on the side or to know about what the alternatives are. So again, one is the wave 5 in purple, which might not, which might only form a marginally lower low below the June, what was that? June low, yeah. Below the June low, whereas the yellow C wave should go down, well, lower, probably to 13 cents or even lower. But I would first probably watch the purple count, which means we have 5 waves down in a C wave. Again, no need to talk about that in too much detail, but the idea would be in the purple count, wave 1 topped here in May 21. Then we had an A wave down, overshooting B wave, and a long C wave in 5 waves. And then we could still recover from there. So just worth to be aware of that. But the local trend is down. Looking at the smaller time frame chart, this is the local trend, which is still down. The wave 1 in the white, I'm only showing you the bullish count here at the moment, but it needs to be approached with the right mindset, I think. We are looking for lower prices as long as resistance doesn't break. And what that resistance area is revealed here on the chart. So we have a WXY structure. We could be in the Y wave, A, B, C. So to get a first indication that a low is in, we need a break above 34.4 cents. The 50% retracement of the latest decline. At the moment, it looks as if we are in some kind of an impulse to the downside. In the white wave count, that would be wave C of Y. Again, it might be something more bearish. There is no low in place until we break above resistance. We had a potential 1-2 setup here to the upside, but as I said, there was a clear level also here that kept us safe. I think it was 34.5 cents as key support. and the move up was questionable, which I've always said, right? So now we seem to be in an impulse down, which suggests this is a third wave down internally. So it needs another 4-5 pattern for a full pattern. Okay, if we break above resistance, some kind of a low is already in place. We would then need to look at the microstructure again, reinterpret. But for now, what that resistance area is clear. And as long as we stay below 34.3 cents, there is no indication of a low. Or in other words, we're looking for lower prices against that resistance area until we see a break of resistance at some point. And the next support levels will be, as I said here, so there's one more here at around 23.8 cents. There's just structural support and the invalidation point around 21.5, 22 cents. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.